everybody, and welcome to today's Back to Business webinar hosted by ICCFA. Before we get started here this afternoon, I just wanted to take a moment to thank ICCFA for having me and Roger. We appreciate all that you do for our wonderful profession. I know myself and Roger are grateful for what you guys do, as I know all of your members are as well. I'm really excited to be here with you guys today, and I'm excited to have someone in the industry that I really look up to and someone who has become a friend, and that's Roger, who I have with me today. Before we kind of jump in, I did want to just start by going over a few housekeeping items. We do have a chat feature, which it looks like Lindsay from Salisbury, North Carolina has already said hello. Hello, Lindsay. Thanks for spending some time with us. If you have any questions, feel free to throw it in the chat here. We'll keep our eye on that as we are spending time with you guys this afternoon. We will allot a few minutes towards the end of our time together today to address any questions. But if you have something that you think is relevant for the specific topic, or worried that you may forget about it, feel free to throw it in the chat. Or if you just have a comment or thought, feel free to share it. So with all that being said, my name is Andrew Kennedy. I am the Senior Loan Officer for Live Oak Bank. I've been with Live Oak Bank since 2018. I love what I do. I get to work with funeral directors, funeral home owners, cemetery owners, operators all across the country. We help people get started. We help them secure financing. We help them achieve their goals and dreams. So that's a little bit about me, and I'm going to turn it over to Roger to introduce himself.
Good afternoon, everyone, and thank you, Andrew. Thank you, Maddie, and thank you, ICCFA, for having this event. Hopefully today some people will be able to pick up some ideas, or at least we can get a conversation started about making sure that there are growth and profitability in your future. My name is Roger Sheagren, and I'm a business consultant with Federated Funeral Directors. We are actually celebrating our 100th anniversary this year. We started in 1925, helping funeral homes. That is our exclusive only clients that we have, and we help them with bookkeeping, tax work, accounting work. We have a department that helps the funeral homes with collections. We have a department that works with payroll. We have a valuations and transaction team that does several hundred evaluations for buyers and sellers. So we can talk a little bit about the numbers that relate to putting together an evaluation. We have a retirement plan division that helps funeral homes set up 401k plans, profit sharing plans, IRAs, things like that. And I'm part of the management consulting group. And there's a number of us in the field that we travel and see the funeral homes, but we also have an office team that compiles the financials of the funeral homes and puts together recommendations on pricing and budgeting and things like that. Just a quick thing about me. I actually grew up in a funeral home, literally, like maybe some of you in the audience, right upstairs at the funeral home. I worked with my dad. I was a licensed funeral director and embalmer, and I've been with Federated now for 18 years. So head it back to you, Andrew.
That's awesome. Thanks, Roger, for sharing that. That's really cool too, that you're a licensed funeral director. And, I know a lot of people find that attractive and, relatable, since you have spent a lot of your life in a funeral home before this gig. So that's awesome. So we are going to be talking about 3 proven strategies to supercharge your funeral home. And we're going to be talking about 3 topics, specifically acquisitions, the importance of having up-to-date and accurate financials and kind of what to be looking for. And we're going to talk about general price list optimization. So with all that being said, I think, Roger, shall we talk about acquisitions first?
Yeah, let me, what I'm finding in my area, there is an awful lot of buying and selling going on. There is more than ever, and I know Federated sees that nationally. I was wondering what kinds of things that you're seeing in the acquisition marketplace.
Yeah, just like we're seeing a lot of acquisition opportunities. We're seeing a lot of people that are starting to think about selling and curious on what to do to get started. I think a big thing, Roger, that I would kind of highlight is it's never too early to start having conversations and kind of thinking about what your goals are in terms of buying or selling and finding the right opportunity. There's a lot of funeral home and cemeteries all across the country, and it's about finding the right one for you, the one that makes the most sense, and one that in which you can find yourself to be successful right from the start. But there's been some studies that have come out that have discussed and kind of shared that close to 40-50% of business owners in our space are expecting to change hands in the next 3 to 5 years. So I think we're started to see that. I know I've seen a lot of acquisition opportunities. I'm sure you have as well nationwide. And it's just important to kind of be thinking about what you can do to grow your business if you are looking to sell, but then also if you're buying, what to be looking for and what you can be doing to grow the funeral home once it's yours.
Yeah, there is a lot of planning that's involved in that and making sure that things are up to date. When I was wondering, from your perspective, what are some of the common mistakes that either a buyer or seller, when they're coming to talk to you about an acquisition or selling a funeral home, well, primarily if they're looking at acquisition from the buyer's perspective, what are some common mistakes that people could probably benefit from?
Yeah, that's a great first question, Roger. I think what's important not to do is to overvalue the specific asset. So if you're one that is looking at financing to buying a business and the real estate, the very first thing your bank or your lender is most likely going to ask you is, is there a purchase price? What is an estimated, breakdown of the purchase price? The business goodwill versus the commercial real estate. I think the biggest thing that it's important to kind of have an understanding on when you are interested in financing and looking at an opportunity, you want to make sure that you're undervaluing, so to speak, especially if you're a buyer, the asset. And what I mean by that is the real estate specifically. Regardless if it's a conventional loan or an SBA loan, you really want to make sure that we're giving a kind of conservative number to what that asset will be, especially with the real estate, since the real estate plays a role with SBA financing, the term that you're able to qualify for from an eligibility standpoint. But then also when it comes to term financing, making sure that we're not overvaluing the real estate. And if you do that, and the third party commercial appraisal comes back after they've been approved for financing, that could change the purchase price. That could change the financed amount. That could then result in an increased seller note to bridge the gap. That could also include, the buyer having to bring more cash to the table. So it's just a really healthy thing to do to, kind of have an idea of what you're buying, the assets that are included, and always trying to take a conservative approach to that. And I think too, just being prepared, asking yourself, have I thought about a business plan? What is most important to me in the acquisitions that I'm looking for? Just having a plan, being familiar with the assets that you're looking to buy is a really good place to start, and one that unfortunately we see quite too often, and what I would call a costly mistake. And we want to do everything we can to avoid that. And, I would also just make one other comment. We understand that the buyer and seller most likely are not an appraiser, right? But, I think we can kind of have an idea and maybe take 80 or 90% of it, is that's going to be really important just to be safe. We like to have surprises that are good surprises, not the other way around that could, really change the dynamic of the deal.
Yeah, I think what a lot of times that I find that the real estate is it is an expensive piece of the funeral home operations, but it's really important to focus in on what the ongoing the operating income and and what that looks like. So those are really good. When you're looking at evaluating an acquisition, what's a good strategic fit for their existing business? Let's just say that, what is it that a funeral home is looking to acquire someone else? What kinds of things that make it a good marriage or a good fit?
I think first and foremost, if you're an existing business owner that's looking to expand, I think you need to understand and have a feel for your existing business, right? Are you in a position where things are kind of rocking and rolling? You feel good about what you have going on, aka are you in a position to expand? And when you're looking at a target business, for me, how I look at these opportunities, if you're looking to acquire a business, we want to make sure that it can stand on its own 2 feet. We want to make sure that the business can support its own debt. If you're an existing business owner that is, cash flow positive, you don't necessarily want your existing business to have to cover, some of the new expenses and debt that you're taking on. Ideally, what you're buying can stand on its own 2 feet. Then you can look at the consolidated global picture and, have excess cash flow that could open up a lot of doors for you. Paying down debt more aggressively, putting money back into the facility, saving, paying out bonuses to your, deserving staff members, et cetera. I also think, when you're looking at buying a business, I think you really need to understand and feel good about the personnel, the staffing that is included with the business, right? Who is leaving with the owner? Is the owner going to stay on for a transition period? What is kind of your comfort level with that? And how does that play a role into that? Those are kinds of questions, things that I would be thinking about if I were an existing business owner that's looking to expand. I think, logically it has to make sense. From a financial standpoint, it's got to be able to cover its own debt. It's got to be, a worthy investment for you. And lastly, again, just to recap, I think it's got to have a staff, especially if you're kind of boots on the ground at your existing place, you're needed there, or you're buying a business that's a little outside of kind of your specific market. Is there anyone there that you can trust? Is there anyone there that can kind of be, your GM if you're trying to balance, your time back and forth between your existing and the business that you're looking to acquire?
Yeah, I'm sure a lot of funeral homes would see in acquiring another business is getting some efficiencies from the additional call volume. But staffing is such an important factor in this, especially if there's some amount of distance between locations. So that's good. Yeah. And I'm finding that in my world where there is, I'll say neighbor acquiring neighbor, and in that, what kinds of things at Live Oak Bank that you're looking for from financials, documents, any kind, what kinds of things are you looking for in order to make a decision or help them through that process?
Yeah, I'm glad you asked. That's, a question that we get quite often. And I'm sure someone, listening today may be asking the same thing. Hey, I'm looking to get started. What exactly do I need to kind of start gathering? How do we make a decision, et cetera? So, I think a wonderful way to approach an acquisition, whether you're looking for your first or looking for your second, third business, cash flow. Live Oak Bank specifically is a cash flow lender. I think that's a pretty universal thought. I think that's a wonderful way to look at the overall health profile of the business. And in order to do that, I think you need to gather some financial information to make a decision on, is it a business worth pursuing, et cetera. And, in order to do that, I would say at minimum 3 years of business tax returns is a great place to start. I think gathering and seeing if you can get your hands on an updated profit and loss and balance sheet just to see how the existing business is performing today As you know, a lot of businesses, this industry, as you guys know, is very cyclical, right? So, what are the trends of the business? What does the current financial picture look like? We may ask, and your bank may ask, what kind of call volume is the business doing? Is it flat? Has it been declining? Has it been increasing? And asking and understanding what the types of calls look like and the cremation rate, the trends that you can see. There may be a couple questions about pre-need, as I think pre-need is a wonderful way to, review future market share is kind of what I think about from a financial standpoint when it comes to pre-need. But having financial information to review is the best place to start. Therefore, you can see the trends, you can calculate the existing cash flow. We can go through that exercise together. We can kind of back into a price. And truthfully, if you're someone that's an existing owner that's looking to maybe sell, I think it's worthy of doing that exercise anyway, right? Again, what does my current business financial cash flow look like? What are some things I can do to grow my business, which we're going to talk about, to making sure that if this is my retirement, I'm hitting the number that I need to be at. So cash flow, when it comes to acquisitions, that's critical. And you've got to understand your cash flow, and you've got to know what a lender, what a company is going to be looking for when we talk about cash flow, which we'll get to.
Yeah, and Live Oak Bank, and in particular, you are really good at helping a possible buyer walk them through that process. I didn't pick up is there some things like, let's say there's a key employee, is there a kind of personal information that you're going to need from them, or what kinds of person, what kind of person are you looking for when they come to you? If I assume many of them have worked at the funeral home, but that doesn't necessarily, I know you and I have had some occasions where they have not worked at that funeral home before at all.
Yeah, I think a few things you can be doing if you're looking for financing, again, whether it's your first or fourth opportunity, someone that's been through the ropes or, down the road a couple times is probably a little more familiar with it. But I think, making sure that your debts are currently being paid, that you're working and are mindful of your personal credit, making sure you're paying your bills on time. Some things that a buyer may need to be able to provide are a few years of personal tax returns. And then, there's templates, forms, like a personal information form with a resume, education, a little bit more about them specifically, maybe a few questions about a business plan, and then a personal financial statement, just to kind of understand who the buyer is. Are they in a position where they can, qualify for acquisition capital? So good question, Roger.
So I guess one of the ultimate bottom lines is how do you determine the price? Let's maybe talk a little bit about that. I mean, we're involved in that quite a bit, but you are looking to make sure that you're loaning the money to people that at the right price. So what goes into that?
Yeah, I think there's a lot of different ways to truthfully kind of arrive at a number. I think if someone's needing a financing, the bank is going to have their specific way, no matter who you're working with, Live Oak Bank, another bank, everyone's going to have their own underwriting and what they're looking for to making sure that it's a good investment. I know for Live Oak Bank specifically, we want to make sure that we're putting the buyer or the borrower in a position where they can be successful from day one. And again, that kind of talked briefly about, making sure if you're buying a business, if it can support its own debt, stand on its own two legs. I talk about that all the time.
Cash flow issues.
Cash flow. And, I think, we can go through an exercise if someone has an opportunity and wants to learn more, but essentially, a really good way to look at that, Roger, is to calculate a debt service coverage ratio, which is a formula that we used calculating kind of EBITDA or net operating income, and then deducting kind of what a buyer salary may look like divided by like an annual debt payment. So kind of backing into a purchase price by making sure that, the debt service coverage, say 1.25, 1.25x, is being met for the financial periods, that we're looking at. So, again, all of that to say, valuations are great. I think there's a lot of people in the space that do wonderful work with that. I think it's a great place to start. And I think it helps kind of set expectations, hopefully, for both parties. But when it comes to, trying to grow your business via acquisition and needing capital and working with a lender to do that, looking at it from a cash flow perspective, debt service coverage is a great and probably the best place to start.
Yeah, I think in our new world, there's in the past, I've been doing this nearly 40 years or just about that. And in the past, there was always those rule of thumbs. It was X amount per funeral or some kind of factoring of multiple of revenue. But this EBITDA, the cash flow and the net operating income, those are so much more accurate for pricing for an acquisition. I was, so you go through that whole process working with you to establish what a price might be. What's some loan options? What kind of financing options might, what's out there now in today's world?
Yeah, absolutely. And I'm going to kind of highlight, from a high level, just a few. But again, what I'm mentioning here, if you're taking notes, I think the goal is to know that there are different options out there and each one is specific to maybe your specific opportunity. There's a loan product hopefully out there for anyone that needs financing. Some may be a better fit than others. But I think the big thing is knowing that there's several different options out there. We don't necessarily expect you as the buyer to know every little detail or take away that from today's discussion. It's more so, hey, if I have an opportunity, I know that there's SBA financing, for instance. That's a wonderful loan-specific program that's great for helping someone get started or for someone that's looking to buy a business and they're trying to keep cash in their pocket. There's ways in which you can qualify for up to 100% financing, have 25-year loan terms, fully amortizing. So the SBA is a very popular way to grow via acquisition. There's also conventional financing out there as well, in which you're lending, on basically two different assets, one the real estate and one the goodwill specifically. Every bank has kind of a different, structure to what that looks like specifically, but conventional term financing is available. It's most popular when there's a healthy amount of real estate included. Maybe the buyer has good equity in their existing business. That could be an option. And lastly, Roger, there's products out there now that are more of an express loan. Hey, like my retort broke and I'm looking to replace it and I need financing, right? And that could be, or if you have a
loans.
Yeah, if you don't have a retort at your facility, and that can be a way to potentially bring more money in the door, be an immediate cost savings to you. There's programs out there that can allow for very quick funding with a streamlined underwriting, credit decisioning approach to get you the money that you need specifically. And that could be used for working capital. That could be used for, putting together an event center, expanding maybe your existing footprint, or, just buying a new piece of equipment or a new hearse. So just overall helping the, overall health of your existing business. So, when we're talking about acquisition and growth specifically, I think the SBA loan product is a great place to start and a great place, even if you're an existing business owner, it certainly has its advantages. And then there's advantages to conventional term financing as well. Again, that can kind of vary depending on, who you're working with from a bank perspective, but that is a popular option as well. So I wanted to just kind of focus today's discussion on those three, as those are really good products available to grow.
Well, that's a great idea, especially as we're talking about growth and profitability. If there's an existing business that's looking to expand their service options, either from a retort or a hearse or those kinds of things, that you have that available. Those can be really impactful, and those are things that I would love to talk with clients about all the time. But I know SBA Live Oak Bank is a cash flow lender. And you mentioned that earlier about that. So what's all involved, and how do you come up with those? How is that determined? What goes into a cash flow? What you're looking for?
Yeah, when we're putting together for a potential customer a cash flow analysis, ultimately we're reviewing the financial statements that are provided in the tax returns. And we're calculating that debt service coverage ratio, or whomever you're working with is most likely looking for a certain requirement or coverage standpoint from a debt service coverage. And ultimately what that really entails is, you take your net income, your Schedule M1 on your tax return, or the net income on the profit and loss statement, if that's what you have. And then you can add back, your non-cash expenses. So your depreciation, your amortization, your interest. If there's intercompany rent, whether you own the real estate personally or the seller owns the real estate personally, or that's being paid to a separate entity like a holding company, you can add back rent. And then two, there's also the conversation on cash flow adjustments. Are there any personal expenses being ran through the business? Are there any one-time in nature expenses being ran through the business? Kind of working with someone that knows the space, they would be able to, put together this analysis to start with that. And then a lot of times, at least what I do, I put together a list of questions for the buyer to ask the seller in order to truly understand the true cash flow of the business if there is an acquisition opportunity and the ownership is changing, right? We see it all the time, and I'm sure you do too, being a large accounting firm specifically for funeral homes. It's pretty common to see personal expenses being ran through the business, ghost employees. So in order to be able to accurately account for that, we've got to ask questions. So there's a process to that. But at the end of the day, we're simply looking at the numbers. We're inquiring and helping the buyer ask questions to the seller in order to give, a fair representation to what the existing cash flow is going to look like from a pro forma standpoint while using the historical cash flow numbers.
Yeah, really some good stuff there.
So I think, that to me, that's a really nice segue to kind of talking about the importance of knowing your financials, making sure that, they're clean, that you're in a position to grow. Again, if you're an existing business owner, I think it's always great to, have a question to go through this exercise, even if you're not looking to buy a business or sell, understanding what your existing business cash flow looks like today, what you can do to improve that. So Roger, you guys spend a lot of time looking at financials. You guys have clients all over the country. What are some of the financial benchmarks funeral home owners should be aware of, that they should be tracking in 2025 in order to stay competitive?
Yeah, thanks. A good set of financials is really important in 2025. The days of in the past when I was first starting off in funeral service of kind of winging your pricing and you always had a casket or a vault sale in order to be profitable. The numbers just have to be so much more precise. And I'm sure at Live Oak Bank, you guys are looking for good, solid financials in order to make some good decisions about that kind of thing. But at Federated, we want to be able to help you understand what those financials look like and understand those financials and how that impact is on your profitability. So understanding things like your revenue per call, what your average cremation sale is, what your average casket sale was, your staffing costs, what contributes to that, and also the mix of your business and call volume, how many of your cremation calls were direct cremations and how many of those had services associated with those. But we want to review those and put into place some ideas and some methods to be able to improve on that. So we track it, and then in looking and understanding what it costs you to operate a funeral home. And one of the things that I think is really important is understanding what the operational cost to do a single burial call or a single cremation call is really important. Call volume still matters in our world, and we can identify what a 100 call firm is, or a 300 call firm, or a 700 call firm is. But what really is the changing point in the current climate is how much service that you are providing to the families you serve. That really is the critical step in making you a profitable funeral home. So revenue has a place in calls, but service really has a place in profitability. And profitability just allows you to grow. It gives you the ability to go and talk to you should you need an acquisition. Your credit scores and your business model looks very good. Your profitability allows you for lots of opportunities in order to be, let's say we want to add some aspects to our facility to increase some level of service that we want to provide, or staffing, or some of those things. Profitability allows you to do that. So a real good understanding of what it costs you to conduct a funeral, and what those parameters are from an expense standpoint, and what are the things that contribute to revenue. So because you're selling less merchandise now, you have less ability to be able to make those profit, the profit that we were used to. So we really have to understand your financials in order to find out what are those channels or avenues or opportunities in order to generate more revenue.
That's really informative. So, what I kind of think of that is you need to understand and have, an idea of what your financials look like today in order to be able to determine what areas you can improve on, right? So like if you don't know what to look for, you don't know what kind of the industry benchmarks are, or what your state, what your geographic region, what, the percentages and what certain things cost, it's going to be really hard, I would imagine, to be able to, decipher ways to improve your business. But when you have an understanding like that, maybe you're working with, an industry related accountant or someone that speaks the same language, that's just a value add, in my opinion. So I think you really need to, in order to grow, you got to know where you are today, and then being able to, have guidance and be advised on things that you can be doing specifically to enhance the overall performance of your business.
Yeah, and I think when you end up having, a lot of funeral homes or owners, small business owners, not to pick on funeral directors, but any small business owners are going to look at the bottom line and say, I made X amount of money. But there's so much more of a story to be told in those financials about what can be brought out to increase your revenue and increase that growth to give you more profitability in those numbers. So, one of the things that I made a note to and I've been saying this, it's been kind of my mantra for several months, is when I'm talking with a client, is we need to seek out those ways to get the chapel lights on. And if you know what I mean by that, that phrase in the past, the families ended up choosing a service, and that entailed a 10:30 service at the church or the funeral home, and they would end up picking a casket, and the profit margins were built up into just having that model. But when less and less people are choosing to have a burial, choosing a casket, there's less merchandise involved. We've got to figure out ways to be more innovative to get the chapel lights on, to utilize this facility. This facility in many ways is certainly your largest asset physically, and we need to make good use of that and that's how you become more profitable. So re-educating families about the value of your service, not just about it being a price point.
Well said. Well said. So you kind of mentioned a couple things here, but can you elaborate a little bit on what types of benchmarks or financial indicators should an owner look to grow their revenue or business? Any thoughts on that?
Well, I think one of the important things that everyone needs to keep in mind, especially to be a broken record about this for a little bit, about days gone past versus where we live in 2025. Cremation calls are not extra calls. A cremation call replaced a burial call. And I think we need to really get an understanding of that. Now, pricing is a way for you to grow profitably. So how determining what it costs you to do a single service, I mean, that's a math problem that we can help you with, but really thinking about what funeral service is and has been for decades. You run a 24/7, 365-day business. Thanksgiving afternoon, somebody is going to that house. It doesn't matter if you're having Christmas presents opened on Christmas morning. The funeral director is being called out to help that family. And there is a cost to having a staff available 24/7, 365 days a year. There is a cost to having a facility that has a property tax and utility bill and phone bills that are ongoing, whether you end up having 5 or 10 or 25 funerals that month. So all those kinds of things, kind of play into how we think about pricing in those margins on what you were talking about, these indicators. And I want to say one positive thing instead of being kind of negative about that we live in the world that we live in, because I think that there's great opportunity. And today is the day that we need to be on the front end of this. There are nearly over 2 million baby boomers that are retiring every year. So the growth potential, the opportunity to be able to serve families is always going to be ever present. People want to remember, they want to celebrate, they want to honor, they want to pay their respects and pay tribute to their loved ones. And how we set ourselves up today with these indicators and with our pricing helps the family through that grief process, but helps allow you to be in your facilities with your staff and operating in a profitable business. I used to I had an ad agency for almost 20 years, and the job was that we worked with funeral homes and helping them brand and market themselves. And much of the marketing and advertising messages were centered on the personalization of the funeral service and what the staff was doing to really help the family through that process. They had a really good location, a really nice facility, really good staff. But lately, what I'm seeing is that it's much more price focused. And I think getting back to basics, if the title of this program of getting back to providing services to families, that really is our back to basics. That helps us it helps us manage profitability and helps us grow in our businesses.
Well said, Roger. Thanks for elaborating on that. That's really helpful. So I know, you have a lot of thoughts on general price list and things that you can be doing to kind of optimize that. What are some of the most impactful changes a funeral home can make to its GPL to drive growth?
Well, let's get back to basics again here. This is a really good spot to reemphasize ICCFA's programming here, because we need to start with our general price list, or at least I'd like to suggest that we discuss and look at that as a first place to go. The FTC put in the funeral ruling over 40 years ago. And we have not really made many adjustments to the general price list since then. But funeral service looks completely different than it did 40 years ago. And so I'd like to get people to think of their general price list less as a compliance tool and more as an opportunity to be able to provide and educate families about what they can do. So, and realize unrealized or recognize unrealized income through your general price list. So making adjustments to make it current for today's world, adding those value added things. There's things that you have been doing for some time that you're not charging for. There are things that families are requesting that you're not that you do, and maybe more routinely, that you need to incorporate into your service offerings. Now, whether that includes, I set aside the FTC required 16 points of your GPL, but what are those pricing that helps you? We're getting a lot more conversations about same-day visitations, weekend services, or Saturday morning services. And funeral directors are often very perplexed by the idea that a family is asking for a Saturday service 3 weeks from now, not knowing if they're going to be busy. How do you figure that out into your pricing and your other structures? Private family viewings for cremation services. And also changing the way we talk about cremations, instead of it calling direct cremation, which was a word that was given to us 40 years ago by the FTC, instead of talking about making families aware of what cremation services are. So not using industry terms, maybe talking about it as a limited cremation service or a non-ceremonial cremation service, so that people get an understanding, and adding that value or adding those services onto cremation services. And we really do need to drill down on that, because cremation rates are over 60%. That means that funeral homes are selling only 4 or 5 caskets out of 10 funerals that they're doing. So trying to get to what's required from the general price list to what's possible, and trying to give them an idea of what they can possibly do. And I think that really certainly helps with generating growth. It helps generating profit, that kind of thing.
I like that a lot. Really good ideas in there. I can tell you are pretty strongly opinionated about that and have some great ideas. So that's well said. So I know you mentioned earlier net operating cost per call.
Yeah.
Let's say I'm a funeral homeowner. What is that, and how does that help me price myself? Can you share some thoughts on that?
Yeah, and before you do, thank you for calling me out for being opinionated about this. I did actually write a book just a couple years ago, trying to give funeral homes a number of ideas of what they could do with their cremation services and increasing revenue, and get them to look at cremation calls differently than I think historically that they've done in the past. When it comes to operational cost, so what we do, and our management consulting group has been doing this for over 50 years. So what they'll do is they'll take the funeral home's financials, their operating expenses, which is going to be things like property taxes, utility bills, their staff costs, their supplies, their vehicle costs, all those kinds of things. Put that together, what we call fixed cost, things that happen whether we're having a funeral or not, the day-to-day expenses. And that amounts to close to 70% of a funeral home's operating revenue. So we need to look at that kind of number carefully. Then you add into there the merchandise sales from caskets, vaults, urns, those kinds of things. And then we take a mix of what your burial call volume and your cremation call volume, and we have some calculations that we put together. So at the end of the day, we're assigning X amount of dollars to burial calls and to cremation calls, because as I said earlier, cremation calls are not extra calls.
Mm-hmm.
And all calls are not created equal, not anymore. I mean, a cremation call has a different way that we need to look at that revenue. And traditionally, when we would come up with a price for what it costs to do a burial call, that would relate to what the traditional service charge that we would recommend to the funeral home. And then they'd be able to sell a casket or a vault, and that would add to the profits. But now with less caskets, we really need to drill down and be much more precise with what it costs you to do a cremation. I've had a number of funeral directors tell me in the past that my only cost associated with cremation is what I pay the retort or the crematory fee, a few $100s. And that just isn't true. Not anymore. When a 200 call funeral home with 50% cremation, 100 of those calls need to be allocated from an operating expense standpoint, with property taxes, with utility bill, with staff costs. Most funeral homes still have the same kind of facility, similar staff. They still have the same vehicles. Maybe they've not added a limousine after that used limousine went defunct. But for the most part, funeral home expenses have remained relatively the same, yet their call volume is completely different. So we need to help them assess what their operating costs are for a burial and cremation and help them with that pricing, because we can no longer drive volume by price. We have to be able to, in order to be profitable, we have to be able to offer services with the funerals that we're offering.
That's great. That's great. And just a reminder here as we kind of wrap up, if you have any questions or thoughts, feel free to throw it in the chat. But Roger, let's say there's someone listening today on the call that has some additional questions for you or wants to get in contact with you because they heard something today that sparked an idea. How can people get in contact with you? What is your contact information?
My name is, and I think I assume this will be on the chat, how to spell my last name, because it's not easy, but it's Roger.Sheagren, SHEAGREN at FFDA.com, Federated Funeral Directors of America.com. So Roger.Sheagren at FFDA.com. And my cell phone is 319-759-0401. And you can go to our website to find me as well at federated-fiducial.com. Great.
And my contact information, I'll give you my cell phone first. That's always the best way to reach me. That's 336-671-0089. Again, 336-671-0089. And my email address is andrew.kennedy. So period between my first and last name, andrew.kennedy at liveoak.bank. Andrew.kennedy at liveoak.bank. Well, this has been awesome, Roger. Really appreciate you sharing your time with me, being a part of this. Anytime I hear you talk, I always learn something new, and hopefully those on the webinar did as well. A lot of great topics, a lot of change going on in the industry right now, but just to kind of highlight the three things that we talked about for strategies to supercharge your funeral home, acquisitions, a lot of acquisitions going on right now, having an understanding and looking at your financials, and then taking a good hard look at your GPL and finding ways to improve and optimize that. So if there's no questions, we will give the folks on the call a few more minutes back. But really appreciate you guys, ICCFA, for having us. You guys do so many great things. Always appreciate being a part of these webinars and trying my best to provide some guidance and education to our members, or to your members, I should say. And Roger, thanks again for joining. Always good seeing you, and hope to see you in person sometime soon.
Yep, we will do that. Thank you, Andrew, for inviting me. Thank you, ICCFA, in particular, Maddie, for putting this together. And please, if anyone has any questions, I'm quite available. So please reach out. As a funeral director, I'm almost 24/7 available, but not in the lines.
I love it. All right. Well, thank you again, everybody, for joining. Thanks, Roger.
Take care.